Hi, and welcome again to another edition of Market Analysis for today, November 22nd, 2023. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. Alrighty then, so let's get with it. In about half an hour from now, the markets will be opening in the New York session. We're looking at the indices that are looking to stay north of 16,000. All right, this particular movement to continue to be appreciated. We saw earlier just now how jobless claims came in unexpectedly better than it was expected. All right, the labor market came out. The jobless claims came out at 209,000. So that the estimates were called for 225,000 print. So that kind of gave a boost, obviously, to the dollar index and to the indices, which we're looking at that fluctuation. So will that happen? Will that fluctuation continue through the day? Yesterday, and Monday's and yesterday's fluctuation gave us a double top. So right around 16,115. So we can anticipate, or we can speculate that the market will come to that high, to that double top, and therefore see if it'll break it or will pull back again. So that's your target. In regards to the S&P 500, well, we are within yesterday's range. So to break out of yesterday's range, we need to see if that will be done. Now, what can happen is the momentum of the influx or the positivity of what we saw coming out of the jobless out of the report of the jobless claims will help the S&P continue to move higher and at least revisit also yesterday's high. So 4580 will be my maximum target. The Dow also, actually, this candle opened at 35,131 and this one closed at 35,143. So therefore, meaning that it opened with a small gap down, but it has been closed. So the fluctuation now we're looking that it's retreating, pulling back. So let's see if at the moment of the open, will the positivity of the jobless claims push the index, the Dow Jones, back up to at least a Monday's high, but that could be short-lived, and then pull back in down to the 35,000 psychological support level. Then we have crude oil. Crude oil yesterday, we used the 10-day moving average as a potential catalyst for support, which it did. Market came down towards it and it rebounded from here. But today we're seeing that the market has just completely made a downward parabolic movement, and looking to perhaps see if this will be the end of that movement, or will it continue to come and revisit that low of November 16th, and that low is 72.40. So we have already surpassed 75. So 73 can also be contemplated, but I will go with the momentum with the movement to that now, movement downwards. Then we have Nat Gas. Nat Gas is also looking at to recovering itself from being in a steadily sell-off several days. Now, one thing that we could probably contemplate and analyze this is, since we are in a sell-off in Nat Gas, so therefore the way for you to come in and profit from here will be selling the contract. So you would have, perhaps, let's say you would have sold at 310. So therefore 310, you sold at 310. The market fluctuated all the way down to 275. 275 here, a lot of people perhaps are taking profit taking. So in order to come out of that position, you need to buy it back. So you sold it at 310 and you buy it back at 275. You keep in the difference right about 35 pips, 35 points. So this could have been just that movement. A lot of people may not want to hold that position overnight in the futures market. Obviously, tomorrow is going to be Thanksgiving, so there's not going to be much volume, but perhaps it's going to be also close the market. So until Friday. So a lot of people may not want to hold the position until Friday. So that's another way to look at it for this recovery in Nat Gas. So I'll be staying out of Nat Gas just because it's going to be a holiday tomorrow. Then we have gold. So taking a look at gold, how will gold continue to move higher? So let's analyze this movement. Let me bring the chart a bit closer. So this low that was created on October 6th, this is when the Israel-Hamas deal broke out on October 7th, and the gold market rallied all the way up to 209. From here, the market has retreated, done a pullback, nice pullback towards the 0.38% Fibonacci level, right? As we see here. From here, the market has rebounded back up to that high, and now the market is looking fresh, looking to see if it'll hold around that level, around this level, and come back up to 2000. But obviously, the gold market is kind of flattish after this employment data coming out unexpectedly. About an improvement in U.S. labor force. So that right there, it isn't what the Feds are really wanting to look at or to hold. Now we have obviously been seeing so many other issues where the Fed is just looking to stay positive in this. So if we see that the Fed is going to start adding liquidity to the market, that could spark a rally in gold. All right. So also, as we look as the first step in the long-term monetization of U.S. government and U.S. government debt, that could be seen as obviously a new form of quantitative easing. So let's see if that particular liquidity coming through the bond market and into the market, that liquidity to the bond market, will that rally gold to hit its all-time high of 2080, which it was obviously created back in 4th of May. Okay, to 80, will that be seen today after today's fluctuation and after today's data? The market did kind of peak, but it's looking flattish right now. Then we have silver that is also looking to recover itself. Let's see if that will be the case. $24 is a target. Copper also has retreated after that news from the labor market. So let's see if it recover, if it found some footing here and just going back up to 380. Then we have Bitcoin that is looking very strong to stay north of 36,000. Let's see if that 10-day moving average is overpassed, and then take another attempt at 38,000 for today. The currencies are looking a bit more sluggish. Yesterday the euro hit 109 and change, 109.6, and from here it retreated back lower today. So yesterday it closed at 109.105. This candle opened at 109.076. So is that gonna be enough of a difference? Okay, because it's a small gap down, and it was close anyhow to continue to push lower. That could happen, and on the pound as well, for the market to continue to push lower towards the 125 marker if the dollar index continues to appreciate. So once the U.S. market opens, will the dollar rally? If the dollar rallies, then we are going to be seeing, a stronger pullback on the metals and on currencies. But if the dollar actually just idles and actually just begins to give back all of this movement to the upside and trades below 103.5 towards the 103, then we're going to be seeing perhaps gold above 2,000, silver around 24, even higher, copper also around 380. Then we're going to be seeing the currencies back up to 109.60 in the euro and 125 in the pound. So that's it for me today. Have a great trading day, and I'll see you tomorrow.